Welcome to BookBuzz Reviews and Summaries. Imagine this. You're in your 30s or 40s, looking back at your financial journey. Are you on track to live the life you've always dreamed of? In a world obsessed with instant gratification, the idea of slow, steady wealth may seem almost old-fashioned. But what if I told you that the key to financial success, true wealth, lies in embracing the power of patience and consistency? Enter William J. Bernstein's If You Can, How Millennials Can Get Rich Slowly. This isn't just another book about getting rich quick. It's a blueprint for building lasting, sustainable wealth over time. In a world filled with flashy investment schemes and get-rich-quick promises, Bernstein's wisdom offers a refreshing antidote, backed by years of research, experience, and a clear understanding of how money works. Whether you're just starting your career or you've been on this journey for a while, If You Can will give you the tools, mindset, and strategies you need to make smart, long-term financial decisions. It's not about chasing shortcuts. It's about using your time and money wisely to create the future you deserve. So let's dive in and discover how you, too, can get rich, slowly but surely. Part 1. Getting Started, the Basics of Building Wealth. Chapter 1. The Importance of Time and Patience in Wealth Building. William J. Bernstein opens If You Can with a simple yet profound statement. The most important ingredient in getting rich is time. Right from the beginning, Bernstein emphasizes that building wealth is not a get-rich-quick endeavor, but rather a slow and steady process that rewards those who are patient and disciplined. Imagine this. You're in your mid-20s, full of ambition, and you're eager to start your financial journey. Maybe you're feeling a bit overwhelmed by all the advice, the market fluctuations, and the flashy stories of overnight successes. Bernstein gently calms these anxieties by explaining that the path to wealth is much simpler and slower than most people realize. He introduces the first major concept, compound interest. Think of it as the magic of wealth building. Every dollar you save and invest grows over time, not just by the interest you earn, but by the interest that interest earns. It's like planting a small tree today that over time, with patience, grows into a mighty oak. While this process is slow at first, the power of compounding accelerates as your wealth grows. Bernstein reminds readers that even small contributions early in life, while seemingly insignificant, can lead to extraordinary wealth in the long run. In this chapter, you also meet the tortoise, a reference to the well-known fable of the slow and steady creature who wins the race. Bernstein compares the tortoise to investors who take a consistent, disciplined approach to their financial goals. Rather than chasing the latest investment trends or panicking during market downturns, they remain patient, letting time and compounding work their magic. Chapter 2. The 4 Pillars of Financial Success. After planting the seed of patience, Bernstein moves into the practical steps needed for wealth building. He introduces 4 essential pillars that every millennial must understand and follow in their journey to financial security. 1. Save aggressively. In this chapter, Bernstein dives into the importance of saving money and setting aside a portion of your income every month. He stresses that the earlier you start saving, especially during your younger years, the better. The story here is about being mindful of your spending habits and finding ways to save. Bernstein doesn't push for extreme austerity, but he encourages millennials to adopt a mindset where saving becomes as automatic as paying bills. He compares it to putting money into a jar each month and watching it slowly grow. 2. Invest in low-cost index funds. For most people, stock picking is a losing game. Bernstein introduces the concept of index funds, which are baskets of stocks that track the performance of a broad market index, like the S&P 500. Index funds offer a low-cost, low-maintenance, and highly effective way to invest over the long term. Bernstein tells a story of how, when he was younger, he tried to time the market and pick stocks like everyone else, only to realize that the key to wealth was simply investing in a broad array of stocks, holding them, and letting the market do the work. He points out that buying and holding index funds allows you to passively grow your wealth without needing to be an expert in the stock market. 3. Avoid debt. Debt is the enemy of financial success. In this chapter, Bernstein explains how the burden of debt, particularly high-interest debt like credit card debt, can undermine any efforts to build wealth. He tells the story of people who live paycheck to paycheck, constantly struggling to pay off credit card bills, and how this prevents them from saving or investing. Bernstein doesn't paint debt as an insurmountable challenge, but rather as something that requires immediate action and discipline to overcome. It's all about living within your means, a principle that sounds basic but is absolutely crucial for financial health. 4. Understand risk. One of the biggest obstacles to wealth building is fear of risk. Bernstein explains that risk is inevitable in investing and that you should understand and embrace it, not avoid it. He uses the story of a first-time investor who panicked and sold during a market downturn to illustrate the dangers of fear-based decision-making. Over time, investors who understand risk and are able to ride out market fluctuations with confidence are the ones who reap the benefits. Bernstein advises millennials to create a portfolio that balances risk according to their risk tolerance and long-term goals. Through these 4 pillars, Bernstein lays the foundation for a straightforward yet powerful financial plan. The principles are simple, but following them requires discipline and a mindset shift. He encourages listeners to start today, regardless of how small their initial steps may seem. In his eyes, the key to financial success lies not in perfection, but in consistency. Chapter 3. The Psychology of Money: How to Overcome Mental Hurdles. By now, the basic principles of wealth building are clear, but Bernstein knows that the hardest part for many people isn't knowing what to do, it's sticking to it. In this chapter, he delves into the psychology of money, exploring the emotional and mental hurdles that often derail people from their financial goals. He tells the story of a young couple who started saving and investing early, but over time, they became distracted by the lure of a luxurious lifestyle. The couple's focus shifted from their long-term goals to short-term pleasures, leading them to overspend and neglect their savings. Bernstein uses this example to show how the emotional appeal of instant gratification can be a serious challenge for millennials. To overcome this, Bernstein offers practical tips on cultivating the right mindset. 1. Focus on the long term. Bernstein encourages readers to picture themselves in the future, with a secure financial situation that allows them to enjoy the fruits of their labor. By focusing on long-term goals, rather than immediate desires, millennials can make better financial decisions. He illustrates this with a story of a couple who committed to saving aggressively for 10 years and were able to retire early, enjoying life without worrying about finances. 2. Avoid comparisons with others. One of the major obstacles to wealth building is comparing yourself to friends, family, and social media influencers. Bernstein points out that wealth is relative, and chasing someone else's version of success is often counterproductive. The real goal is to define your own version of financial security and stick to it, rather than trying to keep up with others. 3. Understand the power of small wins. Bernstein acknowledges that changing your financial behavior is difficult, but it becomes easier when you focus on small, achievable wins. Whether it's saving an extra $50 a month or avoiding an impulse purchase, these small victories build momentum. Over time, they lead to big rewards. Through these psychological strategies, Bernstein empowers millennials to take control of their financial habits and build lasting wealth. Part 2. The Path to Wealth: How to Get Rich Slowly. In Part 2, William J. Bernstein shifts from the theoretical framework laid out in Part 1 to the more practical side of wealth building. The journey begins in earnest as Bernstein dives into the actionable strategies and principles that will help millennials build wealth over time, without resorting to get-rich-quick schemes, high-risk ventures, or life-altering decisions. The message is clear. Wealth accumulation is a long game, and those who are patient, disciplined, and focused on long-term goals will ultimately succeed. Chapter 4. The Basics of Investing: getting comfortable with risk. Bernstein starts by framing the conversation around the most fundamental principle of investing: understanding and managing risk. Millennials, often guided by their aversion to loss, may be reluctant to invest in the stock market or venture into other financial assets, fearing volatility. Bernstein shares a key insight: risk is inevitable, but it's also manageable. He explains how understanding risk in the context of investing can lead to better decisions. He tells stories of young investors who have thrived because they embraced volatility as part of their journey. By setting aside a portion of their monthly earnings into diversified investment portfolios, they allowed time and compound growth to do the heavy lifting. The focus is on broadly diversified index funds and bonds, with regular contributions that steadily grow wealth over the long haul. These aren't high-stakes bets, but rather safe, steady choices that accumulate wealth as you age. Takeaway: the most important point in this chapter is to resist the temptation to time the market and avoid risky short-term strategies. Instead, consistent investing in low-cost, broad-market funds, like those that track the S&P 500, can yield reliable growth over time. The key is patience. Chapter 5: The Magic of Compound Interest, the Eighth Wonder of the World. This chapter takes a closer look at one of the most powerful forces in the universe of finance: compound interest. Bernstein draws on a well-known Einstein quote: "Compound interest is the eighth wonder of the world." In an engaging narrative style, Bernstein explains how this principle works like a snowball rolling down a hill, getting bigger and bigger as it collects more snow, or in this case, money. He presents a few compelling examples of people who started investing in their 20s, making small, regular contributions to their retirement accounts. Over decades, even small monthly investments can turn into significant amounts, all thanks to the magical power of compound interest. To further illustrate, he compares the results of investing $200 a month for 30 years at an average return of 7%, showing how the initial investment grows exponentially. This chapter emphasizes the importance of starting early, a recurring theme in the book. Millennials, who are in their prime earning years, have the advantage of time on their side. The earlier you start investing, the less you have to put in to achieve financial freedom. The power of compound interest is why Bernstein believes that getting rich slowly over time is not just a possibility, but a certainty. Takeaway: starting early, even with modest investments, can result in huge returns by the time you're ready to retire. Bernstein stresses that delaying gratification and investing steadily now will pay off significantly in the future. Chapter 6: Saving Like a Millionaire, the Critical Role of Discipline. Building wealth isn't just about how much you invest, it's about how much you save. In this chapter, Bernstein explores the often overlooked discipline of saving. Millennials are notoriously known for overspending on luxuries and experiences, often at the expense of long-term savings. Bernstein urges his readers to understand the relationship between saving more and investing smartly. He tells the story of a young couple living in a modest apartment, avoiding expensive vacations and gadgets, and instead focusing on saving and investing a significant portion of their income. The couple's financial discipline is rewarded as they use their extra savings to buy low-cost index funds. Their sacrifices pay off over time as they build an impressive investment portfolio. Bernstein stresses that this delayed gratification is what separates wealthy individuals from those who live paycheck to paycheck. Takeaway: saving money, regardless of your income level, creates the foundation for building wealth. Bernstein highlights practical strategies like automating savings through direct deposit and setting up regular investment contributions, making the process easy and effortless. Chapter 7: The Importance of Asset Allocation, Balancing Risk and Reward. In this chapter, Bernstein delves into the world of asset allocation, explaining why it's essential to balance risk with reward. While many millennials may shy away from the stock market because of its volatility, they need to understand that risk is an inherent part of the wealth-building process. Instead of avoiding stocks altogether, The key is to create a well-diversified portfolio that minimizes risk while maximizing returns. Bernstein explains how to allocate assets in a way that fits your life stage and risk tolerance. For younger investors, the suggestion is to favor equities, stocks, with their higher potential for growth. As you approach retirement age, the allocation should shift toward more stable, lower-risk assets like bonds. He explains how this dynamic, age-based strategy works, using simple graphs and examples. Bernstein emphasizes that asset allocation doesn't have to be complicated. Using diversified index funds, you can gain exposure to a broad array of asset classes, from domestic stocks to international bonds. The key is to ensure that the portfolio is rebalanced regularly, maintaining the desired risk profile and growth potential. Takeaway: asset allocation is a fundamental strategy that helps investors manage risk and achieve optimal returns. By understanding your personal risk tolerance and adjusting your investments accordingly, you can weather the ups and downs of the market with confidence. Chapter 8: Avoiding Behavioral Pitfalls: The Dangers of Emotion in Investing. One of the greatest challenges for investors, especially younger ones, is overcoming emotional impulses when it comes to money. Bernstein delves into the psychology of investing and how emotional responses like fear and greed can lead to poor decision-making. He tells a compelling story of an investor who, during a market downturn, sold all of his stocks in a panic. Although he thought he was protecting himself from further loss, the market rebounded, and he missed out on the gains. This emotional reaction, Bernstein explains, is common among investors who don't have a clear strategy or a long-term outlook. This chapter is a powerful reminder that investing is a marathon, not a sprint. Bernstein encourages millennials to stay disciplined and avoid succumbing to market fluctuations, fear, or euphoria. Investors should focus on the long-term picture and stick to their asset allocation, regardless of short-term market movements. Takeaway: emotional control is a key component of successful investing. By staying calm and adhering to a rational strategy, you can avoid the behavioral pitfalls that lead to costly mistakes. Part 3: Mastering the Art of Long-Term Wealth: The Importance of Staying the Course. Bernstein opens Part 3 by driving home one of the most important aspects of wealth building: staying the course. This is not just about picking the right investment strategy or asset classes, but about managing your emotions during inevitable market fluctuations. He compares the stock market to a stormy sea and urges readers to anchor themselves with long-term strategies. He emphasizes that short-term market volatility is unavoidable, but the key to wealth is sticking with a well-structured, diversified portfolio and resisting the temptation to react impulsively to market shifts. Bernstein says that successful investors are those who remain calm and steadfast. They understand that the rewards come with time, not immediate gains. Through a fascinating historical example, Bernstein illustrates how some of the wealthiest individuals over the past century built their fortunes not by timing the market but by staying invested in broad market indices through times of chaos, whether it was the Great Depression, World War II, or the dot-com bubble. The message is clear: patience is one of the most powerful tools in a successful investor's toolbox. The myth of market timing. Next, Bernstein debunks the myth of market timing, the idea that you can buy and sell stocks based on predicting market movements. He uses the analogy of trying to catch a moving bus to highlight how elusive and counterproductive this strategy can be. The reality is that no one can consistently predict the highs and lows of the market, and even professional investors and fund managers often get it wrong. Bernstein warns against the temptation of quick gains, as these can lead to poor decision-making, especially when driven by fear or greed. He shares the stories of investors who missed out on massive growth because they tried to sell at the peak or buy at the bottom, only to be out of the market during times of high returns. He contrasts this with investors who simply followed a long-term, systematic approach, continuing to invest in broad market indices, and ended up wealthier as a result. Understanding the power of compounding. One of the most powerful concepts in Part 3 is compounding, and it's often underestimated. Bernstein takes the time to explain how compounding works, drawing on simple mathematical principles. He uses the example of a small, consistent investment made early in life versus the same amount invested later to illustrate the incredible growth that comes from the passage of time. The earlier you start, the more your money works for you, and the more likely you are to accumulate significant wealth. Bernstein elaborates on the importance of keeping costs low and being tax efficient in order to maximize the potential of compounding. He also discusses how even small contributions, when made consistently over time, can turn into substantial sums. He likens the power of compounding to planting a tree that grows slowly but surely, with the reward coming years down the road. Building the right portfolio, risk, return, and diversification. A large part of building long-term wealth involves crafting the right investment portfolio. Bernstein presents the three pillars of investing: risk, return, and diversification. He emphasizes that young investors, especially millennials, are uniquely positioned to take on a bit more risk, as they have more time to recover from market downturns. He delves into the importance of diversification, explaining that the more broadly diversified your investments are, the less likely it is that you'll experience a catastrophic loss. Bernstein walks through different asset classes, stocks, bonds, real estate, etc., and explains how they behave in different market conditions. He highlights how understanding the correlations between various asset classes can help mitigate risks while optimizing returns. Bernstein goes further to break down how index funds are particularly effective for millennials due to their simplicity, low fees, and historical performance. He stresses the importance of holding a diversified index fund portfolio across a variety of global markets, thus ensuring broad exposure to the world economy. Avoiding the perils of lifestyle inflation. Another key piece of advice in Part 3 involves managing lifestyle inflation. As millennials start earning more and climbing the career ladder, the temptation to upgrade their lifestyle can lead to higher expenses, which erodes their wealth-building potential. Bernstein warns that lifestyle inflation is one of the biggest barriers to long-term wealth accumulation. He suggests that the key to avoiding this trap is to continue living below your means, no matter how much your income grows. By keeping your expenses in check and funneling more money into investments, you can continue building wealth while maintaining a comfortable lifestyle. Bernstein argues that it's often the small habits, like not upgrading to a more expensive car or not spending excessively on vacations, that add up to big gains over time. The role of financial independence and freedom. In the final chapters of Part 3, Bernstein discusses the idea of financial independence and how it isn't just about accumulating wealth for the sake of wealth. He explains that true financial independence means having the freedom to live life on your own terms. He touches on how the pursuit of financial independence can unlock personal freedom, allowing millennials to spend more time doing what they love, pursuing passion projects, or having the flexibility to make career decisions that aren't solely driven by financial concerns. The more wealth you build slowly and steadily, the more options you'll have in life, and the more freedom you'll experience. By focusing on long-term goals rather than immediate gratification, you're able to develop a sense of financial peace. The idea is not to chase after riches in the shortest possible time, but to build a robust financial foundation that gives you control over your future. Bernstein concludes Part 3 by encouraging millennials to shift their mindset from getting rich quickly to building wealth slowly but surely, and trusting in the power of time, patience, and discipline. Thanks for listening. Please like, subscribe, and click the bell icon to get new video updates. Happy learning!